Ladies and gentlemen, please welcome to the stage Nick Gowing, international journalist, broadcaster, and his panelists.
Good afternoon, everybody. I like the way they call this a show. We're going to be talking about ESG, and it's a show, but this is really about a workshop, and that's why it's designed like this, and why we're doing it in the round. I want to say to you right from the get-go that if you want to ask questions or put points of view or your experiences within the organization you work with or for, then please do feel you can do that. This is not just us talking to you. I'm going to be sitting here, so I don't have eyes in the back of my head, but we'll find ways of you attracting attention. Someone will help, or alternatively, if you want to move so I can get an eye line, same with you over there, that would be great. But this is about ESG, and all of you, I hope, will have a perspective on ESG. We're going to be looking at this in two sections, which is why we've actually got two sections of speakers. The first is about corporate investing in ESG, and the second is ESG across the value chain. We're scheduled at the moment to run for an hour and 45 minutes, which means an hour and a half from now. So we'll see where the discussion takes us. But of course, everyone is talking about ESG because it's now become almost a compulsory thing to inject into whatever decision-making you are involved in. And what we want to do is shed light on the kind of engagement that there is, the kind of challenges there have been, the kind of reality there is, the kind of obstruction there is, the kind of reluctance there is, the kind of suspicion there is. And that's why your experience could be just as valuable as the experience of those up here on the platform. So please see it in that spirit. We've got enlightened inside tracks from all our speakers here, and I've encouraged them to think of this as a conversation. So imagine we're having dinner without any food, and that kind of level of exchange, and obviously we're socially distanced as well. But to get us going, Farnam Bidgoli, who's head of ESG solutions for HSBC in the EMEA, is going to give us a few minutes understanding what she sees from the HSBC point of view. It's a relatively new role, correct? It's a relatively new role, but why a bank should want to do this, and also the imperative that there is now for customers, for clients, and for building business. So I'm going to talk to her for about 10 minutes and then open it up with the panelists you can see, and other panelists will join us in about 40 minutes after we've got to that point. I'm tempted to ask all of you, are you all familiar with what ESG is? I'm not going to ask, does anyone not know what ESG is? You might not want to say that. But are you all familiar? Is ESG embedded in your company, your organization, your NGO? Answer, there came none. We've got a bit of work. Who said yes? It's deeply embedded. Because I ask that question because my experience very strongly is there are still those out there who know they need to say it, but don't quite know what it means: environmental, societal, social, and governance. So there is still a challenge. Right, let me sit down and let me ask Farnam to give us some background and some analysis of where you think it is. Where do you think ESG is now among your customers? And what is the breadth of understanding? I've asked rhetorically here whether anyone wants to admit they don't really know about ESG. Maybe they've come here to learn, and maybe I'll be able to find out by the end that they've actually taken away a lot in a way which they weren't thinking about now here at 2 o'clock on the Wednesday. What's the breadth of understanding of ESG in your experience?
Well, Nick, I think you're absolutely right that it's on everyone's lips, and we certainly see it across the investment landscape. You know, the Global Sustainable Investment Alliance is estimating around 35 trillion of assets under management. Nearly 36% of the world's total now includes some integration of environmental, social, and governance factors. We're seeing it in debt capital markets, where we're on track to hit 1 trillion in green, social, sustainable, or sustainability-linked bond issuance this year alone. And it's also driving an acceleration in M&A activity. So from a banking perspective, I think we're hearing about ESG in nearly every single one of our conversations.
Are you having to tell as well? Are you having to share with some of your customers what it is and what they should be thinking about?
I think to a lot of people, ESG is synonymous with climate right now. And so when they talk about ESG, they're really talking about climate risk. And certainly, I think from a banking perspective, a financial system perspective, we've seen in the run-up to COP an acceleration of net zero targets being set, and corporates are doing the same. But the reality is ESG is really about the environmental or social factors that are material to the business and the ways in which a business can have a material environmental and social impact on society. And so actually it's much broader than just climate. And if anything, the past couple of years and the pandemic has demonstrated that the S in ESG is just as important. The resilience of our social infrastructure, the importance of income equality and diversity has really come to the forefront as well. So I think there's a good degree of understanding now around climate. The broader kind of spectrum of ESG, there still remains a lot that is out there.
Of course, it's not just about climate, it's about sustainability.
Absolutely.
So it's got to be broader than climate.
Yeah, I mean, even the E in ESG, I think there's much more beyond it. It's circular economy, it's biodiversity. Maybe where this all stems from is that we probably are further along on some of the kind of standardization and definitions when it comes to climate than we are on other ESG factors. And so it's maybe slightly easier for our clients to digest. But I think in a couple of years' time, you'll see, the biodiversity, gender diversity, all those other factors also coming to the forefront.
What's the big generator within an organization? Is it at the board? Is it the chair of the board? Is it the C-suite? Is it the chief executive? Where is the motivation on ESG coming from? Or in your experience, is it permeating right down through the system?
I think it's coming from all sides. I think certainly we hear from a lot of our clients that their customers are the ones that are really asking for more sustainable business practices. Certainly it's become a really active part of ownership and shareholder dialogue as well over the course of the past few years. But I think for an organization to be able to really embed ESG in their business strategy and activities, of course, it has to come from the top down.
But how much is there a kind of internal struggle going in between the mindset that exists in a company or an organization and the imperative to embrace ESG? In other words, changing the way of thinking, changing the way of behaving, changing the culture.
I think the challenge is more so one of so many different definitions, standards, and requests being pushed at companies. And therefore it being challenging for them to maybe necessarily prioritize. I had one client come to me and say that in a given year, there are 300 different requests for information when it comes to ESG. And, they find it
requests from where?
Requests from rating agencies, requests from shareholders, requests from their clients themselves, requests from NGOs. And I think being able to prioritize and define what the material ESG issues are for a company and, as you say, really embed it into business strategy is difficult when there are so many incoming requests coming to companies as well.
What about data? You're giving us an assessment at the moment, but one of the things which is now becoming so critical in the whole COP process and what has got to be done is the level of data and the measurability. How much can ESG be measured? How much can ESG activity be measured?
Well, again, it kind of comes to that umbrella, term of ESG. I think we are much more further advanced when it comes to climate-related considerations. I mentioned all those incoming requests for information. If there's
But
anywhere...
a request for information is not the same as data, which is indisputable. In other words, it's measured.
But if you speak to investors about why they're requesting information directly from companies, it's because they're not getting the disclosure and the data that they need. And conversely, if you speak to corporates, what you're hearing is that they're putting out an enormous amount of data and disclosure, and they're not really sure it's being digested. And so this is where that importance of kind of standardized and mandated disclosure comes into play. On climate, I think we are getting there with the recommendations of the Task Force on Climate-Related Financial Disclosures. You're now seeing upwards of 2,000 companies that are integrating that into their annual reporting. But we have much further to go when it comes to other ESG issues like diversity, like equality, like the ways in which companies are treating their employees.
Do companies want to do this, measure? Do they feel comfortable about allowing that to happen? Or do they now feel it's such an obligation? They have no alternative, but they're worried about what it'll reveal.
I think they know that they have to do this. I think it's becoming clear that there is enough kind of regulatory push coming, whether from where I sit in London, you're seeing the UK and Europe start to mandate either through the taxonomies that they're developing or through corporate disclosures, a level of minimum disclosure on ESG issues. But at the same time, again, they're eager to find a way to consolidate all of the incoming requests that they're getting with standardized reporting.
Final thought, what about the challenges and the speed at which this is happening? You know, we wouldn't have been talking like this 3 years ago.
So it is happening at an enormous speed, and it's really exciting to see. I think at the same time, and you know, we're running up to COP right now, you know, it's not moving fast enough. There's still a huge financing gap when it comes to what we need to be putting into sustainable infrastructure, into climate adaptation, and what's actually being put into practice. And I think the major challenge there is, again, one that stems back to data and disclosure. You know, at HSBC, we've been involved in a number of initiatives, whether it be through the bond markets or now through project finance and infrastructure with the IFC on finding ways to label sustainable projects in order to make them more digestible for investors and to increase really the capital and the speed that capital is moving towards the investments that we need to make to meet the goals of the Paris Agreement. But this remains a significant challenge.
Of course, we all talk about COP now. We've been living with the prospect of it for 18 months now, since Santiago didn't happen, since Madrid and so on. But COP will be over in 2.5 weeks. And then actually the work needs to continue. Do you believe that COP has acted as an accelerator and a multiplier, or is there a danger that actually the focus is going to slightly witter away after that?
I'm hugely optimistic. I think what you've seen, for instance, in the wake of the number of financial institutions that are setting net zero targets is that now actually the work is beginning. You know, at HSBC, we set our 2050 target earlier this year. We're now in the practice of setting our short and medium term targets for 2030. And I think that we're under pressure to do so from shareholders and other stakeholders. So the acceleration that's happened in the run-up to COP around, you know, commitment to net zero has been really exciting to see. But there's a lot of work and a lot of pressure that continues to translate that into short and medium-term targets.
So it's got to be embedded still in the systems.
Yeah, we need to see the monitoring and measurement to ensure that we're on track to get there.
Okay, good. Well, look, thank you very much indeed, Farnam. Let's open it up. Thanks for being patient, but we thought we'd get that assessment from HSBC. You may have a different view as well. Let me ask you, each of you, to introduce yourselves, because you can do it far better than me. Let's start here with Hazem.
Nick, thank you for having me. Hazem Ben-Gacem, I'm the co-chief executive officer of Investcorp, one of the more active direct private equity, real estate, and other investors globally in Asia, Europe, Middle East, and the US.
Gérard.
I am here as a executive chairman of the French agency for Alula, and so I will speak about Alula project being ESG consistent, but have been for 25 years CEO of Engie and Suez in the energy sector.
But just tell us a bit about about Alula for those who don't know France that well.
Yeah, so Alula is a fantastic project. It's a place in the north-west of Saudi Arabia, which is simply the most beautiful place in the world. That's not only my opinion, that's the opinion of lots of people, and even the opinion of one of the ex-French presidents. So it's very nice, with a heritage from the Nabatean, Dadenite, Hyenite, and extraordinary landscapes. And the Crown Prince has decided in 2017 to make this place one of the most attractive place in the world for culture and tourism. And he asked the support of France, and the French president asked me as a special envoy to negotiate an agreement which was signed in Paris by the Crown Prince and the French president. And they decided to create an agency, a French agency, to work with the Royal Commission of Afalula, which is chaired by the Crown Prince himself, with the CEO, Amer Al-Madani, and we are working hand in hand to co-build, co-design the project, and also motivate the best of the French excellence. This is the project.
Under ESG principles.
No.
Laurie, you've come from Boston.
I have indeed. Lori Heinel. I'm the Global Chief Investment Officer at State Street Global Advisors, which is the asset management arm of State Street, and obviously very honored to be here. We've been involved in ESG issues and managing $4 trillion for many, many years. That's foundational to what we're trying to accomplish, both through our own efforts as well as on behalf of our clients. And I would just, at this moment in time, remind people that we were also one of the individuals who placed the Fearless Girl statue 4 years ago in 2017, very near the New York Stock Exchange, in support of our efforts around diversity in particular. So this is a topic that's very near and dear to our hearts, and I look forward to the conversation.
Thank you. Alessandro.
I'm Alessandro Profumo, CEO of Leonardo, the former Finmeccanica. I've been for 14 years the CEO of Unicredit, so I've been focused on ESG as a banker and now as an industrialist. As you know, Leonardo is an aerospace, defense, and security company, and we are doing quite a lot on ESG.
And just tell us, in broad terms, what you produce in your portfolio at Finmeccanica.
We have 4 main divisions. Helicopters, very well known as Augusta Westland, I'm sure. I hope that British. Many of you fly on our helicopters. Aircraft, mainly fighter and trainers. So Eurofighter is one of our key products, and the 346 as a trainer is quite important. Then defense electronics, which is also quite relevant, mainly command and control and sensor, so infrared, radar, and command and control system. Cybersecurity is the 4th division. Then we have another division, which is a problem, is where we produce fuselage for Boeing, ATR, and Airbus. Since people are flying less, we are quite happy that this kind of event are restarting in person, so people will use our aircraft. So it's a 5th division, which is a little bit problematic.
It wasn't problematic 2 years ago, but it is now.
Clearly, 2 years ago, we were producing 14 787 per month. Now we are producing 3. So, as you can imagine, is pretty different.
All right, Rodrigo. Rodrigo.
So it's a pleasure being here. My name is Rodrigo Tavares. I'm a professor of sustainable finance in Portugal. And at the same time, I'm the founder and the CEO of the Granito Group, which is a financial services organization with a consulting arm, ESG consulting for financial players and for regulators globally, helping them to transition to a sustainable economy, to invest through ESG lenses. Then we have a second arm. We raise capital. We raise billions of dollars every year for ESG assets globally again. And then we have a think tank in our organization where we do all the intellectual work devoted to ESG.
All right. Now, would any of you like to take issue with anything that Farnam has said, your perspectives? And anyone also in the audience? Or maybe you all agree, which is fantastic.
Well, happy to
Please do.
Take a first step. So first, ESG in my mind, in our mind, boils to one simple thing: acting responsibly. I don't think any of us need to be signed up to the UN PRI charters or any of the Paris Accord and what have you for someone to tell us what acting responsibly means. This is a principle which all of us as human beings and responsible individuals have, and that transcends through business, through governance, through our treatment of whether it's employees, our colleagues, our clients, our services. And that notion of acting responsibly is one that has been with us for centuries. And I think businesses in their own respective ways have acted responsibly. Now,
but the definition of responsibility is changing dramatically and very quickly. We can use the word, but the basis and the metrics for responsibility even a few years ago were very different to what they are now.
That is correct. So in the 70s, a very well-known economist, Milton Friedman, made his business doctrine, which was pretty much accepted that management and companies' sole responsibility is to act to the best interest of its shareholders, maximize shareholder returns. This has been what for decades have been taught at business schools, and future business leaders have been taught that your responsibility as a business executive is that for your shareholders. Maximize returns, and then the shareholders can do whatever they want to do. It is terrific that that notion of responsibility transcends to the management and the business. Responsibility goes beyond the shareholders, beyond maximizing returns. And then you get into the other aspects of environmental, equity, diversity, and governance responsibilities which come in place. So I hope there's a new teaching, and I hope there's some new economist who will come up with this new notion of what is the right business doctrine that should go beyond what's for the best shareholder value maximization.
The British Academy has come up with a new definition under its Future of the Corporation project for the last 4 years, which builds on that, but I'll come back to that in a moment.
If I can say one word on this topic, because I think it's incredibly interesting what you just said. If we change the word return with the word value, I think that we have the right perspective, because you can create value only if you have a long-term perspective. We know perfectly that the value of a company is a return per a multiple, and the multiple is higher provided that your results are sustainable. And if you want to have sustainable results, you must have the recognition of your stakeholders as well. Because without employees that are committed to your company, you can't survive. If your customer don't have a long-term relation with you, you know perfectly that the churn rate of a customer reduces the company value. And that's the same. If you have a social environment that creates a negative or a negative regulation because you are not accepted as a citizen, clearly you cannot create value for your shareholders. So I think that the perspective, the long-term perspective is incredibly important. And when I was the CEO of UniCredit, which is a pretty large bank, we were always focused on the sustainability of our customers, because this is a risk management issue. And they are not if they are not sustainable, sooner or later they won't repay your debt, your credit, sorry, their debt. So I think it's really relevant to move from return to values and to have this idea that you can fulfill your main scope if you have a long-term perspective vis-à-vis all your stakeholders, and the shareholders are one of them.
Have you changed your definition of value? Because even NATO, which after all is the umbrella organization which flies a lot of your helicopters on behalf of sovereign states, they are making it clear that sustainability now has to be a central part of defense.
For sure, we are very focused on that. Just to give you an idea, 20% of my long-term incentive are related to ESG targets. We have just issued
Is that for your salary?
My long-term incentive.
But for you and your colleagues?
For you and for all the top management team.
And is that important as an incentive?
It's quite important. We have very specific targets in terms of environment, in terms of social people, in terms of governance. We are the leading company worldwide in Transparency International, for instance, in defense, which is very relevant. And we have just issued 2 credit lines to revolving credit facilities, which are ESG related. So we pay a lower spread, provided that we achieve our targets. So I think it's really relevant that we have a committee of the board which is focused on sustainability, innovation and sustainability. For us, the 2 things are very intertwined. So
but much of what you produce has traditionally been a pretty dirty kind of operation. I mean, helicopters are not clean to fly.
We are working a lot on, for instance, hybrid propulsion, in order to be allowed to switch off one of the 2 engines. We are working a lot on digital twins in order to design and to train people without flying, so we reduce dramatically the CO2 emission. So then clearly the scope 3 is a scope which is in the end of our customer. And again, we are working with them, and now also the defense is start to be focused on the scope 3, the carbon footprint they have, for instance, with fighters. So it's quite an interesting journey.
Laurie.
Yeah, I was just going to say, I think this is kind of a precarious time to be navigating this topic because you've got a lot of capital and a lot of clients that are desperately trying to express their ESG intentionality, however defined. You've got lots of capital going into green initiatives or other ESG-related programs. And part of the danger here is how are we actually driving the long-term outcome that we're trying to achieve? Because if we actually just focus on divestment or we just focus on green, we may be missing a huge opportunity to manage through the transition plan and to think about the various shades of brown energy that can actually contribute to the long-term ESG outcome. So a lot of what we're trying to focus on is how do we engage with our portfolio companies, understand what their ESG intentions are, how are they affecting those, and how are they manifesting those in their outcomes. And then we've taken a very comprehensive process across all of our investment products, including our active products, to say, okay, how do you authentically express your investment thesis, but also understand that these ESG issues, they are material. They are going to actually be equally important to the traditional financial metrics in terms of the long-term trajectory of the client, or the company, risk or return profile. And then perhaps even more importantly, helping clients really understand this landscape, because it's very easy to be a bit whipsawed by your various stakeholders. Certainly in the US, we've had regulatory whipsaws, but you also have large groups of other stakeholders, including some of their constituents that they're trying to fund retirement plans for, that have their own idiosyncratic views of what ESG should be. So I think this kind of conversation, it can't be superficial. It has to be very nuanced, but ultimately we need the eyes on the prize, which is that we need to deliver long-term sustainable capital markets, and that means we'll have better investment outcomes alongside better ESG outcomes.
What is your audit at State Street then about where this is going? Do you agree with Farnam?
Well, I think it's ultimately going to be a conversation, hopefully we're not even having 10 years from now, because it becomes so intrinsic to everything that we're doing. And the enablers are a variety of things. First of all, having the data available to us in a consistent, reliable, comprehensive, and comparable format, because if you have different companies operating in different regimes, publishing different information at different points in time, it's garbage, and you can't make decisions around it. There does have to be some regulatory infrastructure, and I think one of the challenges that we're seeing, and I'd be curious how others are feeling about this, is that each individual geography is sort of on its own journey right now. And so if you're operating in a global world, trying to understand what the different taxonomies are, what compliance means, what reporting information is actually valuable, and oh, by the way, what's actually going to help with good, sound decision-making, that's a critical area that we think needs to be navigated.
10 years, could it be done in 5 years? In other words,
yeah.
because the urgency on sustainability.
I just don't think 5 years is long, and I'm not sure 10 years is long enough, quite honestly. And I think one of the things that is just starting to be grappled with is the cost of the transition, right? We've seen a number of grandiose commitments. I applaud those. I think they're absolutely the right starting point. But now the hard work really begins of how are we going to get there? What's it going to cost? And who are going to bear those costs? Because these are not insignificant or immaterial types of issues.
To this very point, it might be interesting just to take an X-ray of the whole ESG market over the last 10 or 15 years in 30 seconds. So ESG is an acronym which was coined in 2004. And back in 2004, ESG was all about values and ethics and social responsible investment and principles. That is gone. We are in a transition moment right now where maybe 15 years ago, there was just nothing on ESG. There was a vacuum. There was absence of information. Right now, there is too much information. Too many reporting standards, too many ESG rating companies. Too many ESG rating companies. There are more than 100 ESG rating companies. There are more than 25 ways for companies to report their ESG work. There are maybe 40 or 50.
But your judgment is, and the word too many is excessive.
Absolutely. So we are gradually moving into a point which will arise fairly soon where we are not going to have tens, dozens, hundreds of reporting standards, of formats, of principles, of guidelines, of orientations, a cacophony of information, an alphabet soup of terminology. But soon, we are heading towards uniformization, patterns. A good example of that is in Brazil, for example. Brazil, very soon in the coming weeks, is going to be the first country in the world to come up with the first standard with rule-based requirements for a fund manager to declare his or her fund ESG. There is no other country in the world which has its own rule-based establishing law standard determining what a responsible or sustainable investment fund is. So we are clearly heading towards a place where we're going to have standardization, we're going to have patterns, we're going to have uniformization. Look at the ESG rating agencies, for example. We have more than 100. We can compare the number of ESG rating agencies with the credit worthiness agencies. Moody's Standards and Poor's and Fitch, they were created in 1860, 1909, 1913. But most of the ESG rating agencies, they are 1 year old, 2 years old, 5, 10 years old. So very soon, we're not going to have 100 ESG rating agencies, which is very difficult to handle for the companies. Maybe we're going to have 3 or 4 or 5, and that is enough.
Certainly the spirit of the conversation I led in the plenary hall 3 hours ago was one, particularly from the chief executive of the London Stock Exchange, was that standardization is where we've got to be on a number of these things, even if it's overwhelming.
Absolutely, I totally agree with that. The UK is leading, Brazil and Latin America is leading, Canada is leading, Singapore is leading, but not a lot of our countries are leading. And just to point to that very quickly, it's the whole definition of sustainable finance. Just for everyone to be on the same page, sustainable finance is like a Lego game. It's small ball. It's a toolbox. It's additional information beyond the financial information that you can just blend together, having different goals in mind. If you want to assess risk with more precision, you're going to be adding in ESG information. If you want to generate impact, you're going to be adding in additional information. If you want to unlock financial value, you are adding in ESG information. But the way you add in and blend ESG information with financial information, it does change. The techniques change, the mathematical modeling changes, and most of the market is not fully ready to integrate those techniques.
Let's pick up on something that Laurie said, for both of you, particularly, and Gérard, do come in. Do you want to come in now? Because I just want to pick up on one issue of cost, raising costs, but come in immediately, Gérard.
Yes, I would like to speak one word about Saudi Arabia itself, because we are here, and later on Alula. Saudi Arabia, we are speaking about ESG criterion. Governance is important, social inclusiveness is very important, and in environment, biodiversity, the resource preservation, but climate is at the top. And less than 1 week ago, a major decision has been taken in Saudi Arabia for the climate. It was in the Saudi Green Initiative. The Crown Prince has decided that Saudi Arabia would be carbon neutral in 2060. I can tell you that it's the most important decision of the last 2 years I've seen in the world. Why? Because it comes from the country, which is the leading exporter of oil and the largest exporter of gas in the world. And the trend over the last 5 years, since the Paris Agreement and COP21 in Paris, is extraordinary. And that's the best news for the planet, for Saudi Arabia, and also for the world. 5 years ago, 6 years ago, in Paris, I was involved in the negotiations of the Paris Agreement, and Saudi Arabia was among the last countries, government, to accept to sign. And today, this week, the Crown Prince announced that he accepts and he takes the commitment of Saudi Arabia to be carbon neutral in 2060. So that will have a tremendous impact because in all the decisions which will be taken within the kingdom, they will have to be consistent with this target. And that's the case for all the companies, all the cities, the ministerials, the projects. That will be the case also for the Alula project, which is one of so-called mega projects of Saudi Arabia.
I don't have the quote in front of me, but it did also say that there will be a significant future for hydrocarbons. He did also say there will be a significant future for hydrocarbons.
Mm-hmm. That's true.
Yeah,
that's true.
KSA.
The track will be, of course, difficult to reach that target. But for a country like Saudi Arabia, taking that kind of commitment, public commitment, means that behind that, this requires a huge organization and a control method to be sure that each decision taken at each level, in each actor in Saudi Arabia, would be to be consistent with such a target. Because each activity has an impact in emissions. And having the target to be neutral, of course, it's in 40 years. But to get that, with the starting point that we know today, needs an immediate action everywhere.
Thank you very much. Let me just pick up on what Laurie raised with Hazem and Alessandro about the issue of cost, whether ESG is creating increased costs, whether therefore the contracts which are being signed and the prospects mean that entering into ESG carries a price as opposed to an advantage. What's your assessment at Investcorp?
So from the perspective of an investor, first of all, let's separate ESG in two parts: where we invest and how we conduct ourselves during that life of that investment. Is investing in ESG assets a lower return category than others? I'm not sure the answer is yet. Now, Harvard Business School in 2015 did this study. They said that businesses that follow ESG principles, they are on average 6% better performing than those that don't. I don't think there's data enough. I think that's a bit too premature.
What does better performing mean?
Well, it has to be tied to either margins, top-line growth, if it's an investment, the ultimate return on those assets. I don't think they need to be, it shouldn't be a binary formula that if I don't do the ESG principles, I'm going to make more money. I don't think that's the case. Unless you want to go in the cocaine trade, and obviously you make more money without any ESG performing. ESG is a principle. It's a principle which you have to believe in, first and foremost, in terms of how you conduct yourself, whether throughout the life of the investment, what actions you take or you don't take. Okay? And in that respect, if you take it as a principle, it's very difficult to say, well, it's cheaper if I don't embrace those ESG principles. I don't think it's an alternative. It's the same way. We as business owners or investors, there are certain laws and principles we follow. Okay, we can decide to break the laws, and obviously we may make more returns. However, I don't think that is the case. So I think it's a fallacy to look at ESG as a cost item. ESG, in my mind and in our mind, it is a way of conducting ourselves, and that is just how it should be. If that means that will yield lower returns, so be it. I'll give you one example. We owned an Italian vending machine business. It was a difficult investment. We sold it at a loss, and we got some proceeds from the exit. We made the unilateral decision to give half of our proceeds back to the business for the simple reason that cash infusion would have saved the jobs of 60 employees. 60 employees means 60 families. 60 families in Italy most likely means 200 individuals. Do I feel good sleeping at night? 100%. Did we generate a lower return because of that action? Absolutely we did. But I guarantee you that sole action have sent the right message within our organization, within our investors. This is how we conduct ourselves.
Alessandro, what about the issue of cost, which Laurie has raised? Does ESG carry a cost, both in development, research, and the kind of things you've already described, which Leonardo is doing?
first of all, as I said, we put the sustainability function with the innovation function. So we are managing the two things together, which is incredibly relevant if we talk, for instance, of a new hybrid helicopter, which clearly on which we have to invest, but can have a significant impact in terms of our positioning in the market. But we talk of the other two dimensions of ESG, social and governance. What is the price of reputation? In my opinion, is infinite. Because if you lose your reputation, you lose a company. So to have the right governance is really a key element in order to be sustainable in the long term. Or the social elements, people management. We are investing in products that will fly maybe in 2035. If we don't have the right know-how within the company, if we don't invest properly in the future of our population, internal population, we will lose a company.
But we have to assume that your clients are largely sovereign governments who have money from taxpayers.
It's not true, because today, luckily enough, since we are also taxpayer, the government are more and more efficient in the way they buy defense products.
But are they prepared to pay, and I'm speculating here, a premium for recognition of ESG compliance?
I think it's not a matter of premium. You don't work with them if you are not with a certain framework, because the reputational issue, for instance, so to be the world leader in Transparency International, to be the world leader in Dow Jones Sustainability, for us, is a good identity card in order to be here, for instance.
It's good for the brand. Laurie, what's your response to that?
Yeah, look, I think I agree with many of the things that everybody has said around the table here. I think the couple of points that I would make is this is a truly global construct. So it's one in which all the actors, regulators, investors, businesses, consumers have to play a part. And it is going to cost money for us to get to a greener future. There's no mistake about that. And so the question is, how do we do that? Well,
but are you suggesting there's resentment of that?
I think there is a resentment of that. I think, first of all, there are a lot of people putting their heads in the sands and saying that somebody else is going to pay for it. Government's going to fly in and pay for it. Well, we're all going to have to bear the cost in one way or another, but it's the right thing to do, because I do also agree that over the long term, this will create value for society, will create value for investors. But how do you think about countries like India, for example, that perhaps are going through their own economic surge? They're going to be, by definition, consuming more energy. Today, if they are left to the current trajectory, it would be largely coal. That is one of the brownest revenue sources that we have available to us. So how are we as society going to support countries? And I'm not trying to pick on India. You could talk about Germany, who's also very highly dependent on coal. You could talk about parts of the United States. My father was a coal miner. So there are lots of things that we have to come together around and recognize there are going to be some short-term costs. Now, how they're paid for through investors or through governments or through some other transmission mechanism remains to be seen. But that's the part that we have not yet tackled holistically.
All right.
Can I
could I just, Alessandro, does anyone want to come in? Because we can we get the microphone? I'm going to come to you, but we'll get the microphone here, please. Stay where you are. Who's got the microphone? And here, please. Who's got the microphone? One here. I'll come to you in a moment, and one here. Thank you. Alessandro.
No, I would like to add one thing. For instance, one of our key customers, the Pentagon, won't buy anymore after a certain date anything that doesn't have the digital twin. So because they want to be sure that they can put the end in the aircraft also without having the physical aircraft. So to invest in digitalization is key for us, and we know that digitalization will bring a lower cost for industrialization.
But you've been doing that for decades.
So will be really a key element also in order to reduce the CO2 impact and everything else. So this is the reason why we are always considering our investment in relation to the impact they have on the SDGs, the Sustainable Development Goals, the 17 targets. And we are combining a system of co-benefit, the benefit for us and the benefit for the SDG per se. So with all the sub-targets as they have. I think this is quite an interesting way of working within a company, because this changes the culture of the company. And so you don't talk anymore of cost, you talk of innovation, which is key in order to survive.
There is a recurrent question, which is, as an investor, by incorporating this additional ESG data into traditional investment decision making, will I compromise, sacrifice on my financial performance or not? So this question emerges every now and then. I can try to answer as a professor of sustainable finance. There are two ways of answering that question. Number one, there is no such a binary answer. It's not yes or it's not no.
To cost.
Whether there is a correlation between more sustainable companies and better performing companies. It depends on the asset class, depends on the industry, depends on geography. It depends on whether the E, the S, or the G is more material to the financial performance. It just depends. However, if we look at different metrics and different studies, and there is one which is very relevant, which is very recent as well, at New York University, together with Rockefeller Asset Management, what they basically did was, let's not cherry pick 1, 2, or 3 studies, let's bring all of them together, and they surveyed over 1,100 different studies on this very topic. They concluded that 59% of those research papers indicated that yes, there is a positive correlation between more sustainable companies and better performing companies. And only 14% of those studies concluded that that correlation was not palpable. And all the other studies realized that it was actually not possible to establish a direct correlation. So as a professor of sustainable finance, I would say that there is a growing trend, mathematical trend, to believe that yes, depending on certain criteria, there is a positive correlation, eventually even a causation between more sustainable companies, better performing companies.
Good. Right. Let me get 2 comments here. And Farnam, I'd like to come to you at the end. We've got about 10 minutes to run on this section, and then we're going to do a hot switch and keep the conversation going. Please, introduce yourself.
My name is Amancio Torres. I'm Portuguese like Rodrigo, so I'm very happy to see you here in the States. I run a company here in the Middle East, and we are intrinsically, we implement ourselves ESG practices, and also we promote this, and you promote this to our customers.
Keep the microphone a bit closer to you, because
So my question is, I'm back to the performance, sustainable, cost, non-cost. My question is, do you think that if you implement a positive discrimination in the tendering, public and private sector, to award the companies are more ESG oriented than others, can help to reduce the time frame to become a global society concerned about ESG?
All right, thank you. It's quite difficult to hear, not just you, but probably everybody, so bear with us. Did anyone pick that up? Did everyone pick that up?
I think what I heard, and
Laurie.
correct me please, is there are a couple of threads here. One is this issue of, is ESG better investing, but also this issue of the kind of global construct. Is that fair?
No, we don't hear anything.
Right.
I bid for a project here in the country, like other companies, my competition. I'm an ESG player. Should be an award in my punctuation, my score when I tender, because I'm ESG, others are not. Is what I call positive discrimination. Because I have my practice. Can I be score more than others because of that or not?
All right.
Yeah. So I think I got most of that. So I think a couple things that I would opine on. I'm sure my colleagues will have other things to say. First of all, it is true, and we heard the studies cited, and we've done some of our own research, that companies that are better managed from an ESG standpoint do better, right? That they have a better understanding of their ESG footprint, they manage their ESG exposures better, they're less susceptible to crisis situations, and thereby they command a premium. So I agree with that totally. I think the question then becomes, based on what the project is, based on the assessment of the, who all is sort of bearing the cost or bearing the benefits of that project, whether it actually factors into a premium or a discount. I think it's still quite idiosyncratic. But the more we get to standardization around what does it mean to act responsibly, what does it mean to think about the downstream impacts, not just through financial terms, but through other terms, and have ways to price those outcomes, I think that will get to even more favorability around ESG personally.
Any other view here? Otherwise, I'll go here. You got the microphone?
Thank you. So my name is Walid Aska from Rebalance.earth. The last decades, we've seen how innovative startups from Google, from Uber, and so on have truly transformed society. And in response, enterprises have created their own innovation labs. Isn't it time that we have ESG innovation labs in enterprises to engage the army of startups that are trying to make a difference? Thank you.
ESG innovation labs. Hazem.
Well, I hope first and foremost that all academic institutions, where the young generation of leaders, get their education, they need to be the first embracers of ESG, of how to be acting responsibly. The young generation. I mean, first of all, great on the young generation. I think they are the ones who have put this topic front and center on every government's agenda. That is terrific. But now it is the educational, the academic institutions that needs to be embraced full on. And hopefully we'll have that generation. As for an ESG incubation, from my perspective, I don't think it's less about, it's not a startup concept, but it is more working with existing businesses, how to be, let's call it a workshop of how to be able to take that business from where it is today. And usually businesses have their own challenges, and it's great to say, let's all not fly and let's all, forge our carbon neutral. But the reality on the ground is many businesses can't. And perhaps through the use of technological innovation, through the use of best practices across the world, these workshops can work with small, medium-sized businesses, how they can be ESG, they can start their ESG journey using a lot of the best practices that perhaps they don't see or they don't be. It's a great concept. We put our hand up and say we'd love to be kind of an advocate or kind of starting that workshop, at least here in the Middle East, and I hope it's one which could.
You're representing academia here. Give us a quick assessment of whether that's doable, because of course part of the problem is actually business schools now these days. They are not moving fast enough for this new reality.
So median business schools, 5 or 6 years ago, there were maybe 50 pieces of information on ESG globally on an annual basis. Right now, there is maybe 300 pieces of news daily related to ESG. Business schools, all major business schools in the US, they have anything between 10 and 20 courses dedicated to ESG. 5, 6, 7 years ago, only maybe 1 or 2, the same in Europe. However, the students are demanding for a lot of information, and the students have realized that they don't want to be ESG experts. They don't want to be the ESG analyst. They don't want to be the person who crystallizes and monopolizes the ESG information within an organization. Because ESG techniques, ESG knowledge, ESG methodologies are going to be diluted across the organization. The head of human resources, he or she will have an ESG component embedded into his or her work. The head of finance, the CEO, the head of operations, the head of compliance, et cetera, et cetera, et cetera. So that's where the world is going, is heading towards, and the business schools are preparing traditional financial players to a world where ESG is just so ingrained, so embedded, so mainstream that we're going to stop talking about ESG.
I also just want to jump in here because I think we have to appreciate the role that other actors can play. I mean, look at what, again, Saudi Arabia just announced with 2060. I mean, what a catalytic moment. And to have that kind of sponsorship around net zero is quite differently powerful from having the academic.
Farnam, your reflection after this section of the conversation.
I mean, I think we started by talking about the fact that ESG is, a huge conversation topic right now, and that it's been, mentioned by so many different panels, even here just at this conference. And I've been in sustainable finance now for over a decade, and I think we constantly are talking about the mainstreaming of sustainable finance. And we might be there, as you mentioned, in terms of the amount of information now that is coming out about ESG, but I think you issued a really helpful challenge, which is, can we get there in 5 years or in 10 years where all finance just integrates ESG and we're not talking about this as a separate component?
Is that achievable?
I think so.
Anything else from what we've heard, particularly on cost?
I mean, I think the academic studies that have been cited today are up for debate. I think from my perspective, a lot of it comes back to when we're talking about ESG, what are we talking about? And a lot of the studies that you mentioned, the differentiation comes from, which ESG factor is being identified as the one that might be correlated with growth. But I can point to the part of the market that I know best, which is the debt capital markets, where you are now seeing a very clear, what we call awkwardly, greenium for companies that are financing sustainable projects. And I think that points to the fact that it doesn't have to be a cost, that it can be a benefit.
Okay. Does anyone else want to come in quickly? Anyone who's struggling with ESG? Anyone who's working for a company or an organization which is struggling with ESG and you'd like to share it with us? You're among friends here. Gérard, do you want to come in at all? Anything more?
No, not struggling ESG. I've been struggling for ESG for many years, for decades, when I was in the energy sector. One word on cost, because you had not asked me on cost. Of course, we are all convinced that in the long run, ESG has not a cost, but it's been lots of benefits compared to the situation where we were not compliant with the ESG criteria. But let's take, for example, in my sector, energy, what happened on the renewables? 10 years ago, the solar panels had generated a cost per megawatt hour of between 100 and 200 US dollar per megawatt hour. So it had a cost. At this time, it had a huge cost. And without the subsidies given by government, the technology would not have started. The government have subsidized the technology. The costs have progressively declined. And today you have, for example, in this country, some solar farms of 1,000 megawatt, big ones, cost 1 billion. They generate a cost between 15 and 20. So dramatic drop in cost. So in that case, the ESG, the E for the environment, protection of the environment and reduction of carbon by the use of this technology has generated not a cost, but a saving, a huge saving in the cost of energy.
Okay, got 2 or 3 minutes. Laurie, I wonder if you'd like to put up any big challenge which is going to be confronted on ESG. Think about that. Because, Alessandro, I'd like to come to you. I used to be a defense correspondent, and I think about the kind of dirtiness of aviation, and particularly military aviation. And now the real domestic parliamentary pressure in many governments, not every government, about cleaning up even airfields and military airfields, civilian airfields, and you're producing civilian aircraft as well, as you mentioned, the body going down from 14 to 3. Help us understand in your particular area of aerospace, where you think ESG could force the sector. Because at the moment, it's worried about liquidity and whether planes can keep flying because of passengers and so on. But what we're seeing is a significant pressure. John Kerry was here 2 days ago, sort of saying essentially many people are going to have to stop thinking about doing what they normally like to do, which is fly. Now, if you're creating essentially a war machine or a military machine or a security machine, there are certain imperatives. But on the other hand, if there is an E and an S implication, which is around airfields, for example, that the kerosene coming from the aircraft has to be cleaner. They shouldn't be revving up their engines. And the heavy lift aircraft, which tend to produce a lot of a lot of odors and a lot of smoke. Do you see where I'm going? That could it be that your sector, and I'm only asking you because you're here, could it be that your sector is going to face significant ESG pressures, which even you at the moment are not confronting?
We are already facing a significant pressure, mainly on the commercial side, which is clearly the largest one in terms of pollution. So we are working on in different directions. The first one is sustainable aviation fuel. To change the fuel we will utilize on commercial aircraft. There is a significant project in Europe mainly, is called CESAR 2020, which is focused on innovation on aircraft in order to reduce the consumption of any fuel you are utilizing. And the third one is on the way we fly in the air, because we know that aircraft are not going directly from one place to another because of many reasons, mainly security reasons. In Europe, there is a significant project in order to have straightforward flights. We can reduce pollution up to 30%, so it's a lot. So there are different areas on which we are working, clearly. And last but not least, sooner or later we will fly slower than now, because to fly at 900 kilometers and to fly at 600 kilometers makes a huge difference in terms of pollution.
And of course, your adversaries...
It's not necessary to fly so fast.
Your adversaries don't worry about ESG when they're building their aircraft.
This is clearly very important. As I said, digitalization is incredibly important in order to reduce the consumption, which is the main reason. Then we will have hydrogen coming soon. We are working on hybrid. The turboprop, the ATR that we produce will be one of the first user of hybrid propulsion, so we reduce the consumption during the takeoff, which is one of the moments in which you have the highest consumption.
Thank you.
So it's a way to work.
Laurie, one big challenge which you'd like to lay down.
Look, I think one of the biggest things is how do we have a framework for ESG that's analogous to what we have around financial data? So how do we have consistent metrics that are reported by companies or other actors in the space? Because then we can do quality research. We can have evidence-based and research-based ways to look at the outcomes we're going to be driving. So to me, it would be get that alignment and employ those kinds of techniques that we've long deployed in the financial sector to help us solve this problem.
Okay, you're nodding.
I totally agree, and I think that initiative will be announced very soon, IFRS. IFRS is the organization responsible for financial accounting. We have been using that methodology for many years now, and in the coming weeks, IFRS will announce that we'll broaden the scope and we'll start standardizing ESG metrics as well.
Well, look, thank you all very much indeed. We've got half an hour to run. What I'd like to do is just repeat my thanks and say, do stay around if you'd like to, but what I'd like to do is do a hot switch. Farnam, if you'd like to stay, if you can, please do. Thank you all very much indeed. Let me invite, please, Abdulaziz, Candice, Brenet, and Amanda Pullinger onto the platform. Thank you very much indeed. What we're going to do now is talk about ESG across the value chain and the kind of changes that there have to be. Is there anything, Farnam, you'd like to add about the value chain to what you said earlier? Because
yeah, I think it's really interesting. There's been a huge amount of focus over the course of the past couple of years on the largest companies in the world through the Institutional Investors Group on climate change, on implementing net zero commitments at large companies. But we really do have to get SMEs in place as well. And a huge amount of that comes through company supply chains. So 70% of the average company's emissions will come through their scope 3 emissions, including
70%.
70%.
Okay.
And so whilst it's fantastic to see so many companies taking responsibility for getting to net zero on scope 1 and 2, the conversation around scope 3 has become increasingly prominent as well. So I think this is a very timely discussion, and I'm looking forward to hearing everyone's comments.
Good. And the good thing is there are more women on the platform than men, which is an important statement. Candice, why don't you introduce yourself?
Yeah, thank you. Good afternoon, everyone. I am Candice Brenet from Ardian.
Just say again, can you?
Sorry?
It was a bit low, the volume. Say again.
Okay. Hello, I am Candice Brenet from Ardian. I joined in 2008. Ardian is a private investment firm who manages and advises 120 billion of assets under management in private equity, infrastructure, real estate, and private debt. And since I joined in 2008, I have been developing and leading our sustainability program across all our activities.
Amanda.
I'm
sorry I couldn't see you earlier.
No problem. I'm Amanda Pullinger. I'm the CEO of 100 Women in Finance, which is a global association of professionals, women and men in the finance industry across the world. We don't have a location in Saudi yet, but part of my job today is to encourage women and men in the industry here to become part of what we're doing. And our mission is to empower women in the industry and then to inspire the next generation of pre-career young women to come in. And actually, ESG investing has a big part to play in encouraging those young women to come into the industry.
Abdulaziz.
Yeah, Abdulaziz Harbi. I am the CEO of Ma'aden. Ma'aden is a champion of mining in Saudi Arabia. It's a young company relatively and growing very fast during the last 10 to 13 years. And currently we are producing gold and copper and aluminium, and we are probably number 2 exporter of phosphate fertilizer. And we are looking to ambitious future expansion in our production and our portfolio of the metal.
Now, this is quite difficult, but I'm sorry we've had to divide this in 2. But that's the way it's all set up, and we had a discussion beforehand about whether you should all come on the platform, and it was decided it was going to be too busy. So that's why you're here. Any reflections on what you've been hearing so far in the last 45 minutes? Do you agree with it all?
You mean reflection in the previous one?
What we heard in the last 45 minutes.
Yes, and I probably have a chance to hear this, because in our place there we cannot hear the voice, but I'm seeing really great challenges in the future, specifically on the target which we are putting now. And I think, and I do believe personally, that the target which been announced during the last probably 5 years is still not enough to meet Paris agreement. And I agree that there is a lot of challenges from all aspects, specifically in the transition period. So there is a transition period which we need really to focus in the challenges during this period, and I will take the operational challenges. We have challenges in decommissioning the old processes and put a new processes which is more efficient and less CO2 equivalent emission, and also we need to look to a new technology which is a breakthrough technology, changing the way we are processing our metals and also the way we are extracting. And this is one of the major operational changes in the future.
Is it a scale of transition you wouldn't have imagined 3 or 4 years ago because of the ESG principles you've now got to respect?
I think we need really to look to the target, which we need really to do in the climate change, and build all our strategy to achieve this target. Sometimes you find a lot of figures which is not very well being developed. People doesn't know what's technology going to take them there, doesn't know how they are going to finance this, and this is really very important thing.
How much do you think your staff, the people who work for you, are actually conscious of the ESG principles?
There is a growing awareness across our communities, across our people.
Is it just a polite awareness, or is it actually a more deep-seated awareness? In other words, this is going to affect the way we work.
I think this is one of the challenges. I think what we need as leader of the industry to spend more in training and educating and make sure that our executive and our manager and our leaders understand what's needed from them. The ESG is very touching issue, and it's all about our children and grandchildren, and we need really to make sure that we touch the what's in it for me in all our organization.
Candice, what's your, I'll come to both of you now. What are your reflections, given that you are Managing Director, Head of Sustainability and Digital Transformation? What is the effect? How are you implementing this in Ardian?
It has been growing and growing over time. We've started already more than a decade ago, taking a very holistic approach to ESG, considering all aspects of environment, social governance in every aspect of our business.
But was it at the heart of the company's policy making 10 years ago?
Yeah, we've started from the profit sharing with the idea that shared efforts should be rewarded. It's that we wanted to engage all the people involved in the success of our operations to benefit from it, also from a financial perspective. And starting from there, we've built an extensive program with the idea that we should work on ESG across the full value chain of our investments. So obviously it's a huge amount of work with a certain amount of difficulties, as mentioned by Abdulaziz. ESG is about changes in habits, in behaviors, so it requires time, education, but over the last couple of years, I think we've really seen an acceleration globally in the society, but also in the private investment industry, and we can see that also at Ardian, with the young generation putting a lot of pressure in addition to the pressure.
You're feeling that, are you?
Yeah, clearly. It is an additional driver to the pressure that we got from our LPs for a decade, and it's a very welcome pressure, I would say.
Tell me, just describe to us what it's like inside your company, that kind of pressure. How does it manifest itself? How do voices get heard? And how are they received? And what kind of system do you have for embracing it rather than just pushing it to one side?
We've built a team, dedicated ESG team, who works very closely with our investment teams to make sure that ESG is incorporated all along the investment cycle, from sourcing opportunities to the investment decision, and then obviously a lot of work is done during the ownership period. You know, we are a long-term active investor, and that's where we can do a lot of work with our teams, with our investment teams, and that's very much important that they are directly involved in the changes that we want to drive with the portfolio companies. So we work with the portfolio companies directly, but we need our deal teams to be on board, and we're very happy to see that happening more and more.
Can you pick up that point that Laurie raised in the last half about cost? About whether it's actually a cost which is unwelcome, or it's a cost which is producing better margins, better work, better commitment, all round a much improved company?
I think it's all about the time horizon. On the short term, it can be cost, obviously, but on the long term, as it was said, I think it's really about benefits. And we have strong evidence.
You see it as a benefit?
Yeah, we have strong evidence in our portfolio, in our direct investments. For example, during the COVID crisis, we could see that companies with low or no impact by the COVID were also the top performers in ESG. We have also seen at exits that our ESG champions have IRR above 25%, and we see the same correlation in our fund-of-fund business. So I think that's not a coincidence.
Okay, well, Amanda, pick this up, can you, of where you're seeing it? I'm sorry we didn't have a chance to talk previously about how this applies to what you're running.
So I guess, I've heard a lot of the discussions around the frameworks, about the policies, procedures, the pressure on firms. I want to bring in a human element here. So the slogan for this conference is investing in humanity. I would argue that actually, if we're really going to achieve what we need to achieve, we have to be investing through humanity. And I mean all of humanity. So it's not just about those that are at the table today. We need to actually be deliberate. If we're trying to meet very aggressive goals, if we're trying to solve for a complex problem, we need diversity at the table. We need more, whether that's gender diversity, whether that's ethnic diversity, we need multiple voices at the table for two reasons. One is that diversity of thinking brings new opportunities that we wouldn't have imagined out in our own experience. And I think that's going to be critical for solving some of these big issues like climate change. We need a lot more voices at the table. I also think that more voices at the table who've come from different experiences, different backgrounds, different gender, can also bring some really valuable pointers around risk management. If we're all sitting around the table and we've all come from a similar background with similar perceptions of risk, we're going to have blind spots. And I think this is part of the issue. If we look back to the financial crisis, a lot of the issues are there weren't enough people around the table who were questioning what was going on, who had a different perspective. So what I want to bring into the conversation is the fact that in order to create change of any kind, particularly global change, we need to make sure that we are including everybody in the conversation. And that's not just the investors, although clearly we need more women who are in the investment side because they do bring a different perspective. But equally, we need more diverse individuals on the supply side. So I'll give you an example. I had a really interesting meeting on Monday in Dubai with two women who are running a startup business investing in women-owned businesses that are focused on desert tech, agricultural technology, environmental technology, specifically for the Middle East. Now, I'm not saying women do this any better than men, but the fact that these women are trying to find other women out there who can provide solutions, I believe is critical to how we create solutions that are not just inclusive for the sake of it, but actually additive to the whole process. So I think we need to be thinking in very human terms, and we hear a lot about the E, but I believe to get to ESG, you've got to focus on the S and the G. It's harder, because E is this wonderful, wonderful kind of nebulous concept of our climate. When you get into S and G, now you've got to start changing human behavior. And that becomes much more difficult, clearly much more difficult for governments to do, but also as human beings, much more difficult because we're going to have to go outside of our comfort zone. So I have a lot to say about the human element of it. There's one other thing that I want to say, and that is that I think that creating change, I do believe that creating change is a human-to-human interaction. And there's an interesting study that I have with me that, so in September 2021, it was a Stanford UPenn study called The Impact of Impact Investing. And they looked at whether or not divesting had the same impact as engaging. And what they found was that divesting has very little impact in terms of environmental sustainability. Because essentially, if you're selling a stock, you're basically passing that stock on to another investor. You're not necessarily directly having a conversation with an organization about what they're doing. Whereas if you're engaging, if you're having the conversation about what are you doing as management to create a more sustainable environment, now you're having a direct impact. And I'll quote from the study where they say, our results suggest that to have impact, instead of divesting, socially conscious investors should invest and exercise their rights to control to change corporate policy. Well, actually what you're doing is changing human mindsets in those companies.
Let me ask you about the table. You mentioned the table 2 or 3 times, and thinking of what we've been hearing from your company. How do you define the table then? It's like defining the box out of the box. I ask that because many employees find it still difficult to get to any kind of table because they are relegated. They're just not in a circle at the C-suite or whatever. What are you talking about at the table? In other words, creating a kind of some kind of forum which is permanently 24/7 available for discussing all of this.
The first step, I think, is in creating visibility. So in my case, I'm running an organization that's about empowering women. There are actually plenty of women out there who could be at the table, who have the skills. Many of them aren't visible. So if we talk about female investors, the perception amongst many investors is we want to find diverse talent to invest in, but we don't know how to find them. So what we're saying is come to us. So on our website, we have the faces of 500 female fund managers across private equity, real estate, VC, hedge funds, long-only mutual funds. And so when investors come to us now, we say, here they are. Here are people who can sit at the table, who are qualified. But equally to women, our message is, you have got to be visible. Unfortunately, we live in a world where we talk about performance, right? We talk about working hard and that's going to get you ahead. The reality is finance is a relationship business. And unless those investors know who you are, they're not going to know to add you to the table. And so I think visibility is the first step. And in fact, over this past today, I've had a number of conversations at lunch about how many women are in senior roles in Saudi. Well, guess what? The rest of the world doesn't see that. I suspect Saudi doesn't even see it. We're exploring Africa as a potential set of new locations. You go to Nigeria, there are a lot of women in CEO and chair roles in the finance industry in Nigeria. Who knew? Because those women aren't visible to the rest of the world. So I think the first step is to overcome this notion that there aren't diverse voices to be had at the table. That's really the first step.
You'll be delighted to know I was at the G20 Women's Forum in Milan last week, listening to this kind of discussion, and I was very impressed with the speed at which things are moving, including from Lubna Olayan, who's been here. She was chairing something yesterday, who was saying very publicly, and I'm going to probably get these statistics wrong because I'm not looking at my notes, that the percentage of women here has now gone up significantly in positions of responsibility, but it's not kind of known. In fact, when I was last here, I was chairing the governor of the central bank, who's a woman. Now, what's your reaction to all of this, Abdulaziz?
Yeah,
because you're in a heavy industry.
Yes. Let me first start with the Minda first comments that
because we need to focus this on ESG, remember?
Yes. First of all, we need really to have diversity in this table. So we need another man to be with us. So I agree 100% that the S&G is all about behavior of people, and change management will play a big role there. And I think what we have done in Ma'aden, and basically in Ma'aden is working in a remote area, and those remote area usually is not as rich as the economical corridor, Jeddah, Riyadh, Dammam. So we try really to engage and help and empower the community where we are working. And we have a lot of program where we take the student at zero-based. We're not really looking for a brilliant student. We are looking for people which we help them to be a brilliant, and they don't have an opportunity to go to the university.
But have you embedded, what we heard from Candice, for example, have you embedded that kind of attitude?
Yes.
Diversity?
Yes, we do. We started specifically in women, and the diversity we started last year, and we are progressing very well, and we will reach within next 10 years the average of the industry norm, which is 20% to 30%. And I do believe in the future, in the near future, we will have much more opportunity to women to be working with us because of automation, high technology, new skills, which doesn't need really muscles and hard working. So I'm expecting that the mining also will be followed when it's come to technology.
Okay. Let me just ask, does anyone want to come in? I said this right at the beginning, but if anyone would like to come in from the floor, I'm sorry I've got my back to some of you, but put up your hand, please, and help me if you see a hand go up, and then I can get the microphone there. Let me put one thing to you. I'm sitting here thinking how much ESG washing is going on, to use greenwashing, and other washings. Do you fear that that is the case? Do you see a degree of talk about ESG which is not reflected in the reality of what's being done?
Clearly, there is a lot of noise in the market currently, but I'm still optimistic because I've seen the interest growing from everywhere, and we have also a strong push from regulators, which at some point increase constraints on the industry players, but which will bring, I think, a lot of clarity around what is ESG and what we can expect from investors also across the value chain. I think the fact that we have this panel today is also a strong sign that ESG is not only about overarching strategy, about wishful thinking, it's also about very concrete stuff that we can make within companies. And in such a forum, I think it's also a strong signal that there is a common willingness to really accelerate the changes. So yes, there is noise, but there is also a lot of energy, very good energy, I think.
Farnam, I'll come to you on this. What do you think about?
So clearly clearly it's the trend du jour, right? Particularly the environmental side of it. And clearly there is a lot of talk. But I'm somebody who believes that let's have a conversation about this, right?
Is it moving in the right direction?
So I think it is right. I think it is moving in the right direction. And I think a lot of the pressure, so, you've kind of got the carrot and the stick, and I see the government and regulation as being the stick, right? But the carrot is institutional investors who I think increasingly, because of their stakeholders, are wanting to create real meaningful change. It's going to be the money that really moves things at the end of the day. And so when institutional investors come out and say, we expect certain change, that whole engagement that I talked about, we expect changes in these areas, and if we don't see it, we will pull the money and go somewhere else. At the end of the day, this is going to be partly human behavior, partly pressure put on from institutional investors.
Well,
and frankly, I'd much rather an institutional investor is putting that pressure on than someone else.
I think what has changed also drastically around the last years is that a lot of companies understood that there is a question of resilience for them to really embed ESG at the core of their business, because it's a good way to mitigate risk in the supply chain, for example, as we could see during the pandemic. But it's also a very strong level to attract, retain, and grow your talents, which is an increasing concern for lots of companies. And obviously, a lot of investment opportunities have arisen in the ESG space. So I think the push is also now coming from companies.
One of the things that I think has come out in many conversations, not just here today, is ultimately this is about money. And if you've got executives who are incentivized with bonuses based on this kind of thing and KPIs, then that is going to produce a significant change because it becomes a significant part of their annual targets. You're nodding.
Yes, and I think all of us in the executive have a target in ESG. And I have heard so many discussion about what's going on in ESG, and I'm really concerned about the criteria and the management and KPI when it's come to ESG. Everybody having different thing, and some of them are not very effective. So still we are iterating and trying really to make sure that we will come to a very clear, detailed KPIs for our organization. Basically, I think we need really to have a very strong change management into our organization in order to make sure that we will achieve this. And when it's come to environment is not an easy, because what I do believe that if we want to achieve the target of Paris Agreement, we need to change the way and we need to change the technology which we are doing today.
All right. We're almost out of time, as you can see on the clock. I'd like to come to you, Farnam. Remember, we've been talking for about ESG now for an hour and 3/4. There aren't many conferences where you'd have one session about ESG lasting an hour and 3/4 with 9 panelists, 10 panelists. Farnam, your final thought, if I can.
Well, I think that there was a focus on outcomes that you mentioned, which is really important. And you mentioned that the focus has to be on money and incentives. I mean, there are a lot of financial products out there now that are incentivizing.
Do you agree with that principle?
Absolutely, but I don't think it just comes through executive compensation. I think it comes through lending facilities that include diversity targets. I think it comes through companies using their supply chains in a way to incentivize suppliers that are incorporating ESG principles. So I think we have to look across the system and measure the outcomes that we're looking for from ESG perspective. So the concerns around greenwashing really come from a movement away from outcomes. And as long as we stay focused on outcomes, I think that we'll get to the goals of the Paris Agreement and the UN Sustainable Development Goals.
Do you fear the possibility or the inevitability of ESG washing?
I think there's certainly ESG washing present today. And I think that's why there's been this focus in everyone's comments on standardization and outcomes.
Good. Well, look, thank you all very much indeed. And thank you as well, those of you who've been with us for an hour and 3/4. I found it enriching, so thank you very much indeed. Let's hope that if we're invited back next year, we can report even more improvement and more advancing on this critical issue. Because my very strong view, not just because of COP26 next week, is that there's a momentum, there's an accelerator, and it's moving very quickly. And those who sit waiting for it to come to them are going to be lost. So thank you very much indeed. And thank you.
Thank you, Nick.
Thank you.